Hello, everybody, and welcome to another episode of Ask Jameen. I'm Nicci Willis, and
I'm Jameen.
And today we're going to talk about what is going on in the luxury space, not just the luxury space, but the residential luxury market. All right, we've got updates for you, and we're going to talk about how it relates to what's going on in the market right now. Yeah, all the things. All right, here we go. So before we get started, I want to remind you, blah, blah, blah. Start it again. 3, 2, 1. So before we get started, I want to remind you to make sure, if you haven't already, please subscribe. Hit that button right down there in the corner, and make sure you hit the bell also so that you are notified every time we upload new content. Okay, let's get into this luxury space. All right, now for reference, we're talking luxury, so we're talking home prices that are $1 million and up. Okay.
Tell them what used to be luxury.
Used to be $750.
Yeah.
So now, over time, it is, and that's literally just been a few months.
Yesterday's luxury
is not today's luxury. Yes. So $1 million and up is what we're talking about today. And I've got some numbers for you guys. All right. All right. So here we go. In the past 4 months, so January through April of this year, 659 homes sold that were over that were $1 million and over in the Las Vegas area. 659. So compare that to last year, January, February 2021 numbers. 533 houses had been sold. So we've already seen a significant increase in homes being luxury homes being sold in that same time period.
Yeah.
April, just this year, April, 218 luxury homes have sold, and the top sale price was $9 million. Now that was a property that sold in Summerlin. Summerlin. How do I say that? Okay. Now, April of this year, 218 luxury properties sold. That's a record high. The top sale being a $9 million property in Summerlin. That's pretty huge. And as of right now, as of May 1st, I should say, as of May 1st, 270 homes, luxury homes, are pending. So, yeah. So in the next, 2 to 3 weeks, those properties will be closing. So that's already a huge number. I mean, we were talking 218 in April. We're already at 270 that are pending in May. So it's definitely rocking and rolling in the luxury space. As far as May, so there was a $9 million property that sold in April in Summerlin. This year. Mm-hmm. May 11th, a $10.7 million home sold in McDonald Ranch. Just this year.
But tell them where McDonald Ranch is.
Now, McDonald Ranch is in Henderson. Nevada. So yeah, Henderson, Nevada. There are a couple of Hendersons, city of Hendersons out there, but we're talking Henderson, Nevada. McDonald Ranch, $10.7 million home. They just closed on that on May 11th. So those are a few numbers to kind of give the baseline of what we're talking about here. We're talking about luxury real estate, $1 million and up. What are your thoughts so far on those numbers, Boo?
You know, that's a lot. And, you know, it just goes to show what type of market that we're in right now. And, you know, a major thing is you would think that, oh, shoot, those big prices, $1 million homes, they definitely will hold off buying now. The interest rates have gone up. Well, it's quite the opposite. So luxury home buyers are more in tune with the stock market versus interest rates. So more and more investors are finding that real estate is a good place to invest, park their money, and have an interest in that's like less volatile, or one night you can wake up and all your money is gone, like the stock market,
like crypto,
cryptocurrency, and things like that. So a lot of even investors, like that property, if I'm not mistaken, the property that sold at McDonald Ranch was an investor.
It wasn't a primary home.
Put their money there because if you look at stocks, the stock market can crash. You can wake up in the morning and your stock is like 30%, 40% lower than it was, and even with the amounts that we're doing, even the cryptocurrency has went down a lot. It's real volatile. Like you'd be like, oh my gosh, I just made $30,000, and then the next day it could go down 60,000. You know what I mean?
True. It's very volatile.
So the real estate market is like a commodity. It's like you don't see a real big spike in commodities like gold, and gas prices are higher, but like commodities, they're kind of like a safe place to park your money. But here with real estate, with the demand being so high, the appreciation, investors are looking at it as a safer place to put their money, and they're getting the same or higher rate of appreciation than other investment vehicles, and they can do so. Not only are you getting just people who want luxury houses, but now you're looking at people looking at luxury real estate for investment purposes too.
I forgot to tell you guys another fact right now is that people always ask, like, how long are these luxury houses sitting on the market? Well, right now the average time is about 35 days.
And that's a lot less. I think the average in what we call a normal market is like 6 months.
So it's they're definitely moving. We're showing that, or the stats are showing that those properties that have been sitting a little bit longer are also now getting offers, multiple offers, things like that, because I think to your point, like you said, people are finding ways, especially high net worth people are finding more ways to park their money, and using real estate to park their money in a more safer investment. So just 35 days as far as the average. The average price point, I know I've said like the $9 million being the highest and 10.7 being the highest, but the average right now is about 1.8. So that's what we're seeing in the luxury market. Also, I know we talked about like interest rates, right? They're not high net worth individuals are not really moved by interest rates. Now, I want you to kind of think of that in regards to a Rolls Royce. Let's say you like cars, or maybe you like purses. But let's think about that as in a Rolls Royce or an Hermes bag, right? You're not going to use Afterpay for an Hermes bag, right? You're most likely not
for a Birkin bag,
right? You're most likely not going to get a loan for a Rolls Royce. You have the cash to do that. You have a large, or you might have a very large down payment to put on it, and so therefore the interest rate really doesn't move you. So
or even better, like compare a Rolls Royce to gas. Well, compare interest rates to gas prices.
That's
if you want to buy your dream car and you can afford it, people buying a Rolls Royce aren't looking at the gas prices saying, should I buy this Rolls Royce or not? And if they are, they probably shouldn't be
doing it. So to put that into perspective, high net worth individuals, like interest rates really don't move them that much. It's really, is my money, how's my money working for me? Where can I put my money in a place that where it's safe, and where it can hold its value. So definitely real estate is one of those vehicles. And we are definitely seeing that there's no, super dip, in luxury real estate moving. It is still moving at a consistent pace. Now, in regards to Las Vegas real estate, we're still seeing quite a few homes that are turning, and a lot of consistency. We've got, again, all these sports and sports teams and players, high net worth individuals, not just domestically but internationally, that are coming from overseas and things like that, that are purchasing homes. We also, like we just talked about, not just individuals but investment companies are purchasing luxury real estate. I know if you have been with us at least for probably a month, we've talked about short-term rentals. And so if you haven't, I'll put that the short-term rental podcast below. But they're also seeing what they can do with these luxury properties, short-term rentals, corporate rentals, other things that can put their money to work for them.
Yeah, I mean, even going back to what you said about the investment properties, it provides another opportunity, because you even have investors like me. I'm looking at the investments strategy of, okay, luxury properties back in the day. You think, oh, if I buy $1 million house and you have holding costs, the holding costs on 1 month versus 6 months or a year is a big difference. So if you say, oh, well, these houses are selling a lot sooner and I'll have lower holding costs, it's like, okay, let me look at doing that, because it's a big difference between holding a property for a year and holding a property for 30 or even 60 days, on top of the the potential financial profits and gains that you can make. Is definitely something to look at, an opportunity that obviously a lot of people are taking advantage of.
Yeah. What else?
Another thing is like the McDonald Ranch house. Another thing is it's less competition, because if you look at, everybody talks about the average sales price.
Yep.
So the average sales price is just that. So in real estate, we call the sweet spot or the bread and butter. So 80% of people buy this price range. So there's less competition in the luxury market. It's still competition, clearly, because the numbers are getting higher and higher.
Right.
But it's not the 80% bread and butter price range.
Right.
So another opportunity is you can potentially negotiate the price. So like the McDonald Ranch houses. So if I'm not mistaken, that house was listed for like $2 million higher. So they bought the house for about $2 million or 1.7 or 1.8, somewhere right around there, less than the list price. So it provides an opportunity to negotiate. Whereas, in your bread and butter price range,
you're going up against
you're lucky if you're paying list price. You're paying above list price.
Yeah.
Another thing is because the prices are going higher, and in the luxury market, in our market in Vegas, it's still a deal, even though the prices are higher compared to other parts of the country. So if you live in California, New York,
Washington State,
Washington,
Denver, Colorado,
prices are way higher than the Las Vegas market. So, you may have a $3 million house in California. That's your bread and butter price range, and that's somebody's dream home.
Yeah. Oh yeah, absolutely.
You know what I mean?
That would definitely be luxury.
Yeah, so it definitely
3 times over.
Yeah, it'd be definitely luxury. So you would take an average house. In Colorado was somebody's dream.
On the East Coast somewhere.
Oh yeah, for sure. So it's a
translate that over here, and you got a nice deal.
So that's what makes Vegas a great place to live. And a great place to invest.
Yeah, and park your money.
So if you are interested, as we always talk about,
we'd love to help you. Definitely,
love to help you out.
We'd love to help. So thank you guys so much. This one was a quick one. We just wanted to give a quick luxury market update. We talk all things real estate, but we wanted to focus really quickly on that luxury market. If you have a question or a comment, definitely put it down there below. We love reading your comments. Thank you guys so much who always comment. You guys are awesome. And make sure, if you haven't already, to subscribe. Hit that button down there. All right, guys. Well, thank you so much for joining us, and we will see you guys next time.